Welcome to the Stockscores Market Minutes for March 28th, 2014. Before I get into the presentation today, a quick update on the upcoming events we have in April. Calgary, April 3rd and 5th, Vancouver, 12th and 15th. If you are not in those areas, I will also do a webinar version of this presentation on April 17th, which is a Thursday at 4:30 p.m. Pacific time. That's 7:30 Eastern time. To register for any of these events, go to stockscores.com/register. Now, for those who are in Calgary and Vancouver and come out to the live event, once you've registered, we will reserve one of 500 free copies of my book, The Mindless Investor. You must attend the live presentation to receive the book. All right, let's get into strategy development, this week's topic. One of the things I'll be discussing at these presentations coming up in April is the concept of developing strategies. It's probably my favorite thing to do around the market. It's the process of determining the rules for entry, exit, position sizing, and risk management for a trade. Now, once you come up with a trading idea, you then develop that idea into some rules and then backtest those rules to see if that strategy would make money over a large number of trades. Now, backtesting can be a little bit misleading because there's a lot of bias in the process, and a lot of times it really doesn't account for slippage or potential loss just from the bid-ask spread, commissions, that sort of thing. So it's important to not only backtest a strategy, but forward test it with a small amount of risk to determine if there is real-world applicability of a strategy. You also want to develop the processes and tools to put the strategy to work. Ultimately, I want a strategy that gives me an edge over other market participants. And sometimes the edge comes in the form of the rules, but a lot of the time it's just the processes and tools that I've developed, or that you may develop if you're developing your own strategy, that allow you to find the trades sooner than the crowd. Now, this process can take years. My current favorite strategy is something that I've been working to develop over the last 2 years, fairly hardcore, and it's something that I've been doing for about 7 years. So don't underestimate the amount of time that it takes to develop a good trading strategy. But once you have one, it can be incredibly simple to pull money out of the market. That's the point, is a good trading strategy is simple to follow, removing the emotion that comes with financial risk. All right, let's take a look at the charts for this week. This week I'm going to look at one-year daily charts of most of these indexes. Here's a chart of the S&P 500 ETF, SPY, and it's not a particularly negative chart in the short term. We've kind of been grinding sideways, slightly down. The long-term upward trend, which is identified by the green line on the chart, is still intact, so that's a positive for the long-term outlook of the market. But when markets go into these sideways ranges where they go up one day, down 2 days, up one day, down 3 days, that sort of thing, this sort of uncertainty that we're experiencing this March, it's a very difficult market to trade. We've had a lot of volatility, but without a trend. You can see in February we had a strong trend higher. In January we had a strong trend lower. So far in March we really don't have either. It's a sideways trend that's pretty wishy-washy, and that's made it somewhat difficult to trade this month. The TSX 60 index also in a bullish upward trend, slowly working its way back to the upward trend line. Now, it could get back to the upward trend line in 2 down days, 2 big down days, or it could go sideways for 3 weeks and finally get back to the trend line. I think for the buyers to take interest in the market again, we need to get back to that upward trend line. And as I said, it can happen very quickly with some sharp downward moves, or it can take a long time as the market goes sideways until it hits the trend line. TSX Venture Market sold off pretty sharply this last week, largely because of weakness in gold, and that has broken its upward trend line. Now, I want to put a little caveat on that. The upward trend line is very short for the TSX Venture, so a lot of the time in the early stages of a trend, you'll get some wishy-washy market behavior around the trend line as investors are very uncertain. I wouldn't consider it over for the TSX Venture, but it certainly is not as fun as it was in the month of February. The biotech sector, which has been probably one of the, well, I would say the strongest sector over the last couple of years, really ran away from its trend line, which made it quite risky in the month of February. It has fallen back to the trend line now. Friday's close was basically right at the trend line. That means it should bounce next week. No guarantee that it will, but it is likely that this sector is going to bounce back from oversold conditions, something to watch for next week. The Treasury bond market is doing things that don't make a lot of sense to people because it is going up, and that means interest rates are going down. Normally, when the Fed starts to talk about a reduction of the money printing process, which is kind of what they've been hinting at, and in fact tailing back stimulus in the US, you would expect interest rates to go up, which would mean this chart would go down. But in fact, the opposite is happening. We're building rising bottoms on treasuries and actually broke through to some new highs, local highs this past week. And that's a sign that interest rates are actually going to go lower. Now, that's good for the consumer. Interest rates going lower is great, but it's a little bit hard to figure out what's going on in the U.S. Treasury market. All right, the U.S. dollar had a little bit of a bounce back 2 weeks ago and has sort of gotten stuck underneath its downward trend line. I still think this is a negative chart, but it is one that's threatening to break the downward trend line after making a little bit of a double bottom in March. I don't consider this an optimistic chart by any means, but it is one to watch because if we do break that downward trend line, that means the US dollar is firming up, getting stronger, and that's going to be negative for things like gold. And gold is broken its little upward trend line that began in January. Not much of a surprise here because it did hit resistance from the October highs, and you're basically getting some profit taking in gold after really a great run higher. I would say the gold mining sector was up probably about 30% since the start of the year toward the high there, and we're getting some profit taking in that. Fell back a little more than I would expect, and so we'll have to watch it closely next week to see if gold does bounce. It did manage to close above its high, or pardon me, above its open on Friday. That's a very slight positive, but I'm sort of neutral on gold right now given the breakdown this week. Oil has been doing well the last couple of weeks, but hasn't broken out of this long-term pennant pattern. I do like the energy sector a lot. The energy sector has been getting better even while oil prices weren't really doing much. And so it does indicate that money is rotating into the energy sector. And now we're getting some help from the price of oil. Good to see that rising bottom that formed mid-March, and we are now testing the downward trend line. If we break that, we could see oil move back to the September highs, and that would be good for the energy sector. Fear index is very low again, and that's encouraging because with the volatility and uncertainty and I guess the weakness in the stock markets over the last couple of weeks, we haven't seen any kind of a spike up in the VIX, and that tells me that the world does not expect itself to end, the financial world that is. Investors aren't particularly worried about a big sharp correction, at least not so far. And so really we're just getting a process where the buyers are a little tired of buying and they need prices to get a little better for them to take an interest. So I remain bullish long-term on US stocks, neutral short-term. Same can be said for Canadian stocks. I'm lowering my long-term rating on gold to neutral this week with a bearish short-term outlook until we can sort of snap back from the profit taking. I'd be a little bit cautious with the gold stocks. Neutral on oil, but bullish in the short term. We are seeing some of these oil stocks start to break and move higher, and I do like many in the sector. Stocks are working their way back to the long-term upward trend line in a sideways trading pattern that makes short-term trading difficult. Gold has suffered a sharp pullback for the short term, but the long-term outlook still has potential. Oil is building momentum, and energy stocks are benefiting from that optimism. However, oil has not yet given a long-term buy signal. Well, that has been the Market Minutes for March 28th, 2014. Have a great week in the market and trade well.